Not your usual weekly summary. It's going to be a half a year summary, but mainly we're going to focus on the biggest question that happens when we get 6 new all-time highs in 1 year. And yes, this week we got to the 6th all-time high. How do we invest? Do we invest in the dollar cost average, DCA, as probably everyone was recommending us? Or should we buy and just close our eyes? It's called lump sum, investing everything at once. For the last year, I did an experiment. Every day on my Robinhood account, I buy shares of the S&P 500 for $5 every day, every trading day. In another account, actually in the same Robinhood account, but a different ETF, this time VOO, V-O-O, which is exactly like SPY, I decided a year ago that I'm going to buy in lump sum. I'm going to take the amount of days all the way to the end of the year and buy one time the amount. Then the beginning of 2025, I did the same thing for the whole year. And now we're a year after, we have results. So we're going to look at the first half, and then we're going to look at the results and see. You can see for yourself what makes sense for you. Is it better for you to invest everything at once? And I'm talking about the S&P 500. That's the test I've been doing. Or should you be doing dollar cost average? Who are you as an investor? So hello everyone, and if you're new to the channel, welcome. My name is Micha, and on this channel we talk about, actually up until a week and a half ago, every week I posted a weekly summary on our channel. Of course, nothing here is financial advice. Everything is only for your education and entertainment purpose only. But a week and a half ago, I started posting not only videos related to the stock market, but also AI-generated videos and music. So you can have a lot of entertainment on this channel, not only stocks. And if you're new, you, of course, are welcome to subscribe to the channel. Okay. A year ago, we did a test. Lump sum versus dollar cost average. Here we are today, a year later, but we're going to start by summarizing the first half of 2025. This is how it went. And I'm discounting the first 3 days of July. They're not in these charts. Can you believe that the first half of 2025, NASDAQ is up 8%, S&P up 6%, Dow up 4%, Russell was negative, it's already positive if I combine the last 3 days. So 3 out of 4 major averages, positive for the year, with a correction, with a bear market that we entered. The Great or the Magnificent Seven, not all of them were magnificent. Meta with a phenomenal beginning of the year, up 26%. Broadcom up 19.5. Microsoft up 18.5. Nvidia up 17.5. While Amazon ended the half, nothing. How is that possible? Zero. Google down, Apple down, Tesla down. As you can see, Tesla down 21% with Elon and his politics and Trump and everything. Crypto market, not a huge success this first half. Bitcoin up only 12.9. When I'm saying only is when the NASDAQ is up 8%, you would expect the Bitcoin to be up a lot more than 12.9. You can see gold and silver here, 25%, while crude oil and natural gas negative on the year. And the indices themselves, except the healthcare and consumer discretionary, all of them green. 6th time this week, and this is combining already the last few days, we have acquired all-time high. 6th time we've achieved all-time high. 6 times. And it's very, very important for everyone to remember. All-time high creates an all-time high, creates an all-time high until it doesn't. It might be several years, it might be several weeks, and then again, all-time high and all-time high. Why? Because the S&P 500, at least in the history of it, has always reached an all-time high. It might end, but currently, that is the situation. And when that is the situation, and thanks Charlie Bilello for sharing this table, which I often use, there's always a question. If we're at all-time high, maybe I should wait for a correction. Maybe, why am I buying at the most expensive price? I'll wait for a correction. By the way, when there's a correction, no one buys because they're afraid of buying. Okay. So there are two avenues, or let's call it strategies, of buying the S&P 500 or the NASDAQ. They're summarized here in this infographic, which I created on Gemini. One is called lump sum, buying once with all the amount. The other one is called dollar cost average. Now, I'm not going to tell you what you should do. I'm going to share with you the information, and then you will take the decision according to who you are. Let's start with lump sum. And of course, I'm not saying which one is better or not. You know what? Let me show you the experiment. This is the account that I bought a year ago for 6 months. It was $705. Then at the beginning of the year, another $1,250 for the whole year. This is the other. I'm not going to tell you the results yet. This is the second account, which every day I buy with $5. Both of them, they're in a drip account, so the dividend is reinvested automatic, so I don't get the money to myself. It always generates more and more. Okay, so dividend reinvestment on both. One buys one time, lump sum. The other one, dollar cost average. Let's look at the pros and cons. Here they are. Lump sum, buying once. The key principle is pretty easy. Maximize time in the market. What does it mean? You buy once, you have all the time you're invested. Your money starts working from day one. You're capturing the full potential, the return of the market. Quantitative bottom line, it wins 66% of the time. Did it win this year? Remember, we had a bear market. We had 6 all-time highs. You'll see in a second. The main drawback is the regret risk. What does it mean? Oh, I bought at the beginning of the year and the stocks went down. Maybe I shouldn't have bought. Who is this for? Investors with a long-term horizon of 10 years, high risk tolerance, who trust the history data, and won't be rattled by volatility. By the way, this describes very well me. I can tell you. The other one, dollar cost average. Dollar cost average means you buy every day, every week, every 2 weeks, every month. You decide the cadence. Key principle, you basically reduce your timing risk. Why? Because you don't take the risk of buying at the beginning of the year and then get all the fluctuation and the volatility. There's a behavior advantage. There's a peace of mind. You're not saying, oh, it went up, it went down. You know you buy every 2 weeks once you get a paycheck. Main drawback, cash drag. You don't maximize your position. Who is it for? It's for risk-averse investors who fear large and immediate losses. Just like we had this year, the market went down 22%. Or those who know they might panic sell during a downturn. When I'm saying it went down, during this year, guys, the market went down 20 to 25% depending on the average. This is a huge drawdown. Now, if you see these things and you're like, I probably would have sold, then it means that you would have probably sold at the bottom. So the lump sum is not for you. Why? Because you would probably do a very, very wrong thing. Okay, so who is the strategy for? If your risk tolerance after a 20% drawdown is you're going to be very stressed, you have a low risk tolerance. If your time horizon is less than 5 years, you're short in time horizon, which means you probably should go with the dollar cost average option. On the flip side, if you don't care about volatility because you understand that it's part of the game, and also your time horizon is more than 10 years, the math shows that it makes more sense to do lump sum. By the way, you can also do hybrid. The one thing that everyone agrees on is most people, or most of the money that was lost in the market was waiting for corrections versus people that were in the market. Meaning that a lot of people wait all the time for corrections and never put their money to work. The biggest risk isn't choosing suboptimal strategy, but staying out of the market due to fear and over-analysis. So what happened in the thing that I did? Okay, I took the VOO and bought it once a year ago and once 6 months ago. And the SPY, every day, $5 a day. On the SPY, for the last a bit more than a year and a week or something like that, I'm up 9%. Put aside the numbers, they don't mean anything, they mean the numbers themselves. So buying every day with a specific amount brought me 9% performance gain with dividends. You want to know the lump sum? 10.16. 10.16% on the lump sum. So basically, what Vanguard showed is that 66% of the time you win with lump sum, proved in my case, although it's only after a year, but it proved. And notice this, the Vanguard study found that average portfolio advantage 2.3% after 10 years. I got 10.6, 908. I got 1.6% already after 1 year for the lump sum. Makes a lot of sense. By the way, what would happen if I wouldn't buy at the beginning of the year? I don't know. I would know because that's part of the game. So we are entering July, which is usually a bullish month. We're entering with a lot of data that supports another strong year after we cleared a lot of the hurdles. When we look forward, we should probably know all the tariffs in the next few weeks. Whether we like them or not, it doesn't really matter. The market needs that clarity. Once they have the clarity, the market can perform. So one will know tariffs, or maybe even ask yourself this following question. Is the situation in 6 months going to be more clearer than today? Are we going to know more things in 6 months than today? If the answer is yes, then basically the situation is going to be better. So one, tariffs are better. Two, war in the Middle East. It seems like it's probably going to end or ended or going to end, depending on if it's Iran or Palestinians or something, or Hamas. Russia, Ukraine, probably going to end this way or the other in the next 6 months. So that's also going to end. So that's going to be better. And rates are probably going to come down. So if you have all these things stacked up, probably the second half, as it seems right now, is going to be positive. Again, no one has been in the future. You can add to that the fact that there's $7.3 trillion in money market funds waiting to step in. Remember, more people lost money by waiting for corrections than the market itself. Guess what? They waited for a correction, which happened only 3 months ago. So, where are we going right now? As it seems right now, the market is bullish. Yes, we're already at extreme greed. Yes, probably a correction is due, or at least a stabilization for a few days. But we are at a very bullish month. August, September might be a bit more volatile, and then end of the year is usually a lot of momentum comes in. I hope you enjoyed this quite different video where you can share it with most of your friends. Maybe we'll get more people to join the channel. And you can enjoy the music. You can enjoy the videos, the AI videos, everything you want. I'm Micha Stocks saying thank you for being here. Don't forget to like and subscribe. See you next time.